This presentation explains the impact of time on the extent of R&D credits claimed and the deadlines for filing amended returns. Tax filing dates and rules are set by law. Filing dates determine when tax returns can be amended, which opens the possibility of claiming more R&D credits. To better understand the filing dates for each type of business, it is important to understand the difference between a calendar year and a fiscal year. Calendar years are always from January 1st to December 31st. Fiscal years can be any 12-month period of time. Fiscal years drive tax reporting. Taxpayers pick fiscal years different from calendar years to suit their operational purposes, so they aren't doing taxes in a period of peak activity, like Christmas time would be for retail companies. For C corporations and S corporations, the initial filing date is 2.5 months after the end of the fiscal year. The extended filing date is 6 months after the initial filing date. So if the fiscal year end is December 31st, the initial filing date would be 2.5 months after that, which would be March 15th. The extended filing date would be 6 months after March 15th, which would be September 15th. Fiscal years that don't run congruent to calendar years are designated by the month in which they end. For example, a fiscal year that runs from October 1st, 2012 to September 30th, 2013 is called fiscal year 2013. Limited liability companies are initially treated like a sole proprietorship or partnership with an initial filing date of April 15th and extended filing date of October 15th. LLCs can elect to change to a different fiscal year and are then treated like a corporation for tax purposes. For details on timing issues for LLCs, please search for SwansonReed's YouTube presentation at R&D Credit LLC. Individuals, sole proprietorships, partnerships, estates, and trusts have the same initial filing date of April 15th and an extended filing date of October 15th. Individuals receive flow-through benefits from S Corps and LLCs. Now moving on to filing dates for amended returns. Amended returns for C corporations and S corporations can be done up to 3 years after the filing date. For example, if filed on the initial filing date of March 15, 2012, then the last date to file an amended return would be exactly 3 years later on March 15, 2015. If filed on the extended filing date of September 15, 2012, then the last date to file an amended return would be 3 years later than that, on September 15, 2015. LLCs are likewise limited by the 3-year rule to file an amended return. When filing an amended return for any year, it is important to ask the taxpayer when he or she filed their return for that fiscal year. Add 3 years to that filing date to get the cutoff date for filing. Corporations use Form 1120X to amend a past return. LLCs use Form 1065 to amend a past return. Be aware that for amended returns, the IRS can re-examine the entire year, so the taxpayer must feel confident about everything in that year's return. Generally, the IRS can include returns filed within the last 3 years in an audit. Additional years can be added if a substantial error is identified. Generally, if a substantial error is identified, the IRS will not go back more than the last 6 years. When collecting qualified research expenses, they must be sorted by fiscal years. If the fiscal year ran from July 1st, 2013 to June 30th, 2014, the QRE must come from that period. When claims for multiple fiscal years are being made, the QRE must be likewise sorted. Each fiscal year stands independently as a separate claim. Credits can be carried forward 20 years and back 1. For C corporations, R&D credits can be earned in any year, but normally they benefit a C corporation in profitable years only. Carry forward and carry back provisions allow for that. C corps are separate legal entities. They have taxes only in profitable years, and R&D credits can offset them. There must be a tax against which the credit is applied, and taxes exist only in profitable years. In an unprofitable year, an R&D credit would have to be great enough to reverse what made the C corporation unprofitable. S corporations and LLCs do not have to be profitable in the year in which they want to claim an R&D credit, but they must be actively engaged with carry on a trade or business. They cannot be merely investing in someone else's activity or acting as a conduit. S corporations and LLCs simply pass on incomes and credits to their shareholders or owners. For more detailed treatment of R&D credits on S corps and LLCs and their shareholders and owners, please search for SwansonReed's YouTube presentation at SR R&D Credit Calculations. In summary, the initial filing date is the end of the fiscal year plus 2.5 months. If an LLC is still being treated like a partnership, its initial filing date is April 15th by statute. The extended filing date is the initial filing date plus 6 months. Amended returns can be filed up to 3 years from whichever filing date was used. Federal and Texas credits can be carried back 1 year and forward 20 years.